The public portfolio is currently at $71,100, and I wanted to talk about not specifically what I'm doing in the portfolio itself, but from a macro level, what happens to investors when there's a recession. Right now, there's around a 52% chance that the US enters a recession, but is that the end of the world for investors? Turns out it isn't. If we look at the previous data, previous recessions, the S&P 500 on average drops around 21% after 169 days, and after 312 days, there's a near complete market recovery. So if you invest during the recession, you actually may come out ahead and you get the benefit of dollar cost averaging. And then the year after the recovery, you see an average of 16% gains. What I also thought was interesting was actually the biggest declines in these bear markets that we see happens after the Fed pivots hard. So if they take the federal funds rate from 4% and drop it close to zero, that usually means that the economy is really headed towards the shitter and they need to backstop it. Stocks tank, but then they usually find a bottom because they realize interest rates are low, debt is cheap, and eventually we get a bounce. So I'm really looking more for a huge Fed pivot than if we just entered a recession to take advantage of any huge drop.